A weaker U.S. dollar index supported gold buying this Thursday as investors and traders await important monthly data just around the corner. We have Jim Wyckoff up next. Jim, thanks for being with us.
Hello, Daniela. Good to see you.
So, Jim, technically, there might not be much activity happening for the precious metals, but there's no shortage of news. The ECB and the Bank of England both announcing they will not make any changes to their interest rates. Does this impact the metals in any way?
Well, the news today from the BOE and the ECB was not unexpected. The marketplace may have been a bit surprised by Draghi taking the middle of the road, so to speak, on easing versus tightening of monetary policy. The euro did rally just a bit because some traders interpreted Draghi's remarks as maybe being just a bit hawkish on monetary policy, but certainly not by much.
And in the U.S. Friday, Jim, we have jobs numbers coming out. Will you be paying attention?
Very close attention is going to be paid to the jobs report on Friday. Some are saying that's going to be the most important report in a long time. Early forecasts are for a rise in non-farm payrolls of 170,000 or thereabouts in the month of May. So any deviation from that figure is probably going to cause some significant volatility in the precious metals and also in other markets.
Jim, why is there so much importance being placed on tomorrow's numbers?
Well, the recent Fed comments and reports suggest that the central bank of the U.S. is leaning toward maybe cutting off some of its monetary stimulus. So if we get a strong jobs report on Friday, that's only going to bolster notions that the Fed is going to back off on its heavy easing of monetary policy the past few years. We get a weak report on Friday on jobs, and that's going to augur for ideas that aggressive easing can continue, including the Fed's quantitative easing and its bond buying program.
So, Jim, you're saying it could cause volatility?
I think it probably will, unless it comes in as expected.
If we look at the daily bar chart now, Jim, August gold future bears still have the overall near-term technical advantage. Prices are in an 8-month-old downtrend on the daily bar chart. However, recent uptrending price action in gold suggests the beginnings of a big and bullish double bottom reversal pattern forming. Can you explain, Jim?
Well, what that means is that we have seen a good rebound off the recent lows, but the bulls just don't have enough power to sustain an uptrend yet. So we're just kind of trading choppy and sideways.
All right, Jim, we'll wrap today with your Wyckoff market rating for gold and silver this week.
Danielle, I'm giving both gold and silver a rating of 3, which leans toward the bearish camp. Both markets have shown resilience, which the bulls do like to see. Prices are trading choppy and sideways, but neither market has the technical power yet to be able to sustain an uptrend. So we're just trading sideways and choppy, which does suggest both markets have put in a near-term low.
Jim, good thoughts from you today. Finally, did you pay attention to Rubini's forecast for $1,000 gold within the next 2 years?
You know, I did not, Daniela. I've been so busy doing other things. Many times we analysts get so busy that we have a hard time keeping track of our own stuff, let alone following what other people do.
Jim, thanks for your thoughts. We'll see you next week.
Can't wait till next time, Daniela.
And thanks for watching this edition of Technically Speaking. Email us. We want to hear from you at newsfeedback@kitco.com. Thanks for watching.